housing prices were inflated into bubble territory by the Fed, which is always the big blower of bubbles. The Fed kept interest rates at zero for a decade, pretty much. And people were able to borrow money to buy homes with percent mortgages. And that gave them a lot of purchasing power because the monthly payments were lower. And so they can afford to pay much higher prices. And so prices went up. But now mortgage rates are still low by historical measures, 6.5 or something like that. But they're double the rates they used to be. And that means that real estate prices are completely unaffordable, which is the case. And one of the reasons that we haven't had a bigger collapse yet in prices is because a lot of the homeowners don't have to sell. And because they have either no mortgage or they have a very low mortgage, they're able to make their payments. And so there's not a lot of pressure to leave. But over time, people have to sell their houses. They move, they lose a job, somebody dies. And so houses are going to be coming on the market. The problem is there are very few buyers who can afford to pay them unless the price collapses, which ultimately is what's going to happen because home prices are ultimately set by the buyers. The sellers can hope they get a good price, but at the end of the day, if they actually want to sell their property, somebody has to buy it. And so the buyer has to be able to afford it if it's going to get sold. And I think prices need to come down 30 to 50% from where they are now to get to a level where they're affordable.